Hey everyone, welcome back to Corporate Decoder. Today we're diving to the financials of Lottery.com, and let me tell you, this report is like a roller coaster at a discount amusement park. Expect a lot of ups and downs, but maybe not the thrills you were hoping for. First, a quick overview. Lottery.com aims to be a big player in the lottery and sports entertainment world. They sell lottery tickets online, provide data services, and are trying to make sports.com a thing. But it's been a bumpy ride, especially after some internal investigations a couple of years ago that led to a complete stop of their main operations. Their main office is now in Fort Worth, Texas. So let's decode what's really going on, shall we? This isn't their first attempt to get their finances in order. This is amendment number 2 to their S1 form. That means they've already had to make changes to their initial plan to register and sell shares. The auditors themselves are waving a red flag, saying there's substantial doubt about Lottery.com's ability to stay afloat for the next year. It is never good to see that. Why such doom and gloom? Well, those internal investigations from a couple of years ago continue to cast a long shadow. These issues cost them a lot of money and are distracting management. Plus, there are lawsuits from investors who aren't happy, and that could make things even worse. They have problems meeting state and federal laws about selling lottery tickets. This is kind of a big deal in the lottery business, which is heavily regulated. They are categorized as a non-accelerated filler, meaning they don't have to report as quickly as bigger companies. And also they are still an emerging growth company, so they get some breaks on following all the new accounting rules. They are also a smaller reporting company, which gives them some leeway in what they have to report. In July 2022, they didn't have enough money, so they furloughed most employees and paused selling lottery tickets. The company owes a lot of money to employees. The last thing they want is to lose any workers with experience. To restart full operations, they'll need to find money to bring back people. Their internal controls are shaky. Basically, they don't have enough people who know what they're doing when it comes to complex accounting, and their procedures aren't working right. Here's a key piece of their plan: a deal with Generating Alpha Limited, where they can sell up to $100 million in stock. The thing is, the number of shares they might sell is indefinite, unclear, potentially limited. They are currently only registering 20 million at this time as an estimate. They get money. Generating Alpha gets stock at a discount. This whole stock registration is labeled preliminary prospectus subject to completion, and calls out that these securities may not be sold, nor may offers to buy be accepted prior to the time the registration statement becomes effective. They're also registering the resale of shares already held by some shareholders. That means those shareholders can sell their shares, and Lottery.com won't get any of that money, except maybe if some warrants get exercised. All right, let's look at the numbers, so the details of the shares they are offering. First, there's 22.4 million shares for the stock purchase agreement. That's the deal where Generating Alpha buys stock from them. If they sell all those shares, they estimate about $92 million in proceeds, which they want to use for operations, product development, acquisitions. It sounds like the usual growing tech company spiel. Then they are listing 5.68 million shares from selling shareholders, some of which are for a commitment fee and from consultants. The transfer agent is Continental Stock Transfer and Trust, meaning they are the people who keep track of who owns what stock. Alright, now for the interesting part, the financial table. As of December 31, 2024, the net tangible book value per share is only about 0.05 TAFE cents per share. However, they assume that it would go up to $0 and dollars end per share after this stock offering. So basically, new investors are paying a lot more for each share than what the company's assets are actually worth, and will have an immediate dilution in net tangible book value of DSM per share, however their stock offering. So basically, new investors are paying a lot more for each share than what the company's assets are actually worth, and will have an immediate dilution in net tangible book value of 0.59 per share after this stock offering. So basically, new investors are paying a lot more for each share than what the company's assets are actually worth, and will have an immediate dilution in net tangible book value of 0.666 per common share. Attracting users and keeping them interested is very important to growing revenues. They are counting on people adopting mobile lottery and want to use marketing to get people to sign up. However, there is no guarantee this will work as planned. Gross profit decreased by 45%, and this was primarily because a bulk ticket sale from last year did not occur this year. What about the fine print? The stock purchase agreement will terminate in 5 years, and the company can pull it whenever they want. If they cancel this but raise less than $5 million, cancellation fee. A risk in the area they operate is general health. There's a lot of risks listed. Most can be summarized in things may change and we can't guarantee that things will improve. We might even shut down completely. As always, any potential risks might result in a material adverse effect on Lottery.com. It's very long at almost 100 pages, so I will list a few important parts and their pages. Prospectus summary 2, risk factors 6, use of proceeds 45, management's discussion and analysis of financial condition and results of operations 48. Also, as always, check with your own personal advisor about the content here as they are not responsible. And finally, there might be conflicts of interest with related parties and always read the details yourself. The stock is trading under 1 at the time of the report, which puts them at risk of being delisted from the Nasdaq. If they fail to stay listed, it's harder to sell the stock and it's just a bad look in general. Now, my take, Lottery.com is trying to turn things around and Sports.com might be an interesting venture, but wow, there are a lot of risks and uncertainty. The stock dilution from selling shares to generating alpha is a big concern because it makes the stock cheaper, which could hurt existing investors. Plus, they need to prove they can actually run a profitable business and comply with all those regulations. The good thing is that it looks like the management is addressing the legacy issues and trying to improve things by finding new markets for expansion. I'm not touching this stock with a 10-foot pole right now. Until they can prove they can make money and that going concern warning goes away, this one is way too risky for me. Thanks for tuning in to Corporate Decoder. If you found this breakdown helpful, please like, subscribe and leave a comment. Let me know which company you want me to decode next.